I'm Daryl Kryst, Vice President of Asia Agriculture here at StoneX. You are listening to our latest installment of our AgriAsia Podcast in Singapore, where we are usually joined by our local experts to discuss the latest market developments from an Asia perspective. Darren and the team are away this week, so I will be going through the coffee market. Let's begin. So let's start with the big picture. What happened to coffee prices last week? Well, coffee futures rallied strongly last week, with Arabica leading the charge. The rally was likely driven by US tariff-induced supply tightness, shrinking ICE-certified stocks, and lingering concerns over Brazil's next harvest. While Robusta also joined the move higher, recovering to over $4,600 a ton, up about 5.5% week on week. After last week's heavy liquidation, Robusta likely benefited from substitution demand and spillover fund buying. The stronger export flows from Vietnam and Indonesia capped the upside. We also saw the March ARB trading up near the 180 cent level. That could further fuel more substitution buying. So what's going on with the speculative traders and commercials in the market? Well, positioning data shows a clear divergence. In New York Arabica, funds added to their bullish bets, with managed money net longs climbing from about 32,500 contracts to just over 36,500 contracts. That's quite a solid build, showing speculators likely still leaning heavily into the bullish story. On the other side, commercials deepen their hedging, becoming more net short at just under 33,500 contracts. This reflecting producers selling into the rally. In London Robusta, funds were more cautious. Net long slipped slightly to just under 11,500 contracts, while producer merchant shorts eased, suggesting some of the hedging pressure has come off as prices have stabilized. Following on from that, how significant is the divergence between speculative and commercial positioning right now? Well, in Arabica, funds are aggressively long, while commercials are ramping up hedges, a classic tug-of-war. Historically, when funds get this extended, the market can be prone to sharp corrections in its fundamental shift. But with certified stocks so low and exports falling, it's tough to fade the bullish bias that is trading at the moment. Let's move to the powerhouse, Brazil. Are they still driving this rally? In short, yes. Brazil's August coffee exports fell about 17.5% year on year, with Arabica down 11%, and Robusta down more than 30%. Exports to the US plunged a massive 46% thanks to the 50% US tariff, forcing US buyers to lean more heavily on certified stocks, which are now at their lowest levels since May 2024. CONAB also trimmed its 2025 harvest forecast to just over 55 million bags, raising fresh concerns about available supply. On top of that, forecasters say dry conditions in Minas Gerais remain a risk for the flowering season. If rains don't arrive soon, the 2026-2027 crop outlook could weaken even further. So with that being said, what are the implications of Brazil's dry weather and La Niña risks for the 2026-2027 crop? Well, dryness in Minas Gerais is already stressing flowering conditions. And with a 71% chance of La Niña developing later this year, weather volatility could spread to Vietnam and Indonesia too. That adds further upside risk, making weather a critical wildcard for both Arabica and Robusta in both regions. So, with that being said, what about Robusta? What's happening with Vietnam and Indonesia? Well, Vietnam's export hit 85,000 tons in August, up nearly 13% year on year, and cumulative shipments so far this year are almost at 8% higher. That growth is helping ease some supply tightness. Indonesia's harvest is also picking up pace under favorable weather. Still, even with more beans coming out of Asia, structural demand for Robusta substitution remains firm. US tariffs on Brazilian Arabica are diverting demand to Africa and Southeast Asia, which is keeping Robusta supported, despite improved supply flows. Moving on to the demand side, we've already seen roasters in Brazil raise shelf prices last week, reflecting higher input costs. In the US, Roasters have been pulling heavily from ICE-certified stocks to cover gaps, and those stocks are getting very tight, which will likely lead them to also raise their shelf prices. Globally, green coffee exports slipped about 0.7% year-on-year in July, though that comes after a record shipment month the year before. So it looks more like normalization than an actual collapse in demand. Okay, so let's end with the key takeaways for traders in Asia this week. So here's the bottom line. Arabica is still the story. Tariffs, falling certified stocks, and dry weather in Brazil have combined to create a bullish cocktail, and funds are also piling in. Robusta has followed higher, but rising exports out of Vietnam and Indonesia may temper the upside. But for how long, time will tell. For Asian traders and roasters, the key risks are Brazil's flowering season and the US trade policy. If the Supreme Court overturns tariffs later this year, flows could shift dramatically and move strictly back to the US. Until then, the market remains tilted bullish, but volatility will stay high, especially with Arabica perched just below the 400 cent level and speculators heavily long. So that's it for this week. Thanks for listening. We will be returning to our regular format next week, and we hope you continue to join us on our journey. Please don't forget to like and subscribe. Till next week. Thank you.
This podcast is for informational purposes only and is not a recommendation to trade, an investment research, or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs. The trading of financial products such as futures, options, or swaps involves a substantial amount of risk and may not be suitable for everyone. Past results are not indicative of future performance. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you.